Ms. Naina Batra, Chairperson and CEO, AVPN, distinguished guests, ladies and gentlemen, good morning. Thank you for inviting me to the 8th AVPN conference, and I'm very glad that AVPN has pressed on with the flagship event virtually in these unprecedented times. The COVID-19 pandemic has resulted in significant health, economic, and social challenges globally. The IMF has projected that global GDP will contract by 3% this year, marking a significantly deeper downturn than the 0.1% contraction in 2009 during the global financial crisis. The power of networks, which is the theme of this year's AVPN conference, is highly apt as we strive towards the United Nations Sustainable Development Goals. Addressing complex and multidimensional challenges like climate action, inequality, and quality healthcare and education requires policymakers, financial institutions, corporates, non-governmental organizations, and multilateral development banks to come together on a common global challenge. The financial sector and MDBs have stepped up and shored capital towards building capacity in healthcare and pharmaceuticals while supporting the recovery. Social and sustainability bond issuances totaled $24 billion in the first quarter of this year, nearly double that of the same period last year. The bond proceeds are channeled to support healthcare and pharmaceutical development for the benefit of lower-income households and small businesses. The World Bank's pandemic bond facility has been triggered and will provide $195 million in emergency financing to 64 of the world's poorest countries to support their recovery. Today, I will focus on opportunities in green and sustainable finance and impact investing. The pandemic provides a prime opportunity for countries to build back better. It is important now more than ever that countries not only rebuild their economies and preserve jobs, but also in the process intentionally build a more sustainable new economy. There have been growing calls for governments to prioritize or accelerate green infrastructure development as part of recovery plans. Infrastructure development is critical to driving economic growth and improving social outcomes, while climate change remains a significant threat to mankind. It is important that a right balance between growth and sustainability be achieved. Public-private partnerships will be key to achieving this. Last week, Infrastructure Asia in Singapore partnered the World Bank Group and Singapore Management University to build capabilities of regional government officials and raise awareness of solutions to support sustainable and resilient infrastructure development, such as clean energy projects. Singapore is committed to support the pivot towards a clean and sustainable future. MAS announced our Finance Action Plan last year, which comprises 3 thrusts. Firstly, building resilience to environmental risks. Secondly, developing green finance solutions and markets. And thirdly, leveraging on innovation and technology. So we have made good progress across all 3 thrusts. We will issue a consultation paper on MAS's environmental risk management guidelines for the banking, insurance, and asset management sectors later this year. These guidelines will set standards on governance, risk management, and disclosure to enhance the financial system's resilience to environmental risks. Last year, we expanded the Sustainable Bond Grant Scheme to support not just green, but also social and sustainability bonds. This year, to celebrate green and sustainability-linked lending, we are developing a green and sustainability loan grant scheme, which aims to defray the costs of external review and bank frameworks for such loans. This seeks to increase the ease of loan origination and reduce expenses for small and medium-sized enterprises, and encourage SMEs, corporates, as well as banks to integrate green and sustainability issues in their financing discussions and decisions. We will also be anchoring centers of excellence in Singapore to undertake quality green finance research and talent development with strong customization and applications for Asia's transition needs. So the theme for the Global Fintech Accelerator in this year's Singapore Fintech Festival is building resilience, seizing opportunities, emerging stronger. So the accelerator will identify solutions that enable financial institutions to respond to the pandemic and climate change. So MAS has received a record 100 problem statements on pertinent areas, including improving supply chain resilience amidst disruptions in manufacturing and the flow of goods and services during the pandemic. Driving social impact by improving credit access for lower income individuals and SMEs. And accelerating green finance flows to support low carbon economic activities. I welcome your support in rallying startups in your networks to submit their proposed solutions. We encourage the financial sector and corporates to work in tandem with MAS's green finance efforts. And on this front, we have seen encouraging developments even in recent months. Global banks like Deutsche Bank and JP Morgan have pledged to increase sustainable financing flows. The National University of Singapore became the first university in Asia to issue a green bond, working with OCBC and DBS Bank. NUS issued $300 million to finance projects targeted at green buildings, renewable energy, and sustainable management of water and land. Capital Land, meanwhile, raised 1.5 billion Singapore dollars through sustainable finance this year, including a $500 million sustainability-linked loan from UOB, the Singapore real estate sector's largest issuance 2 weeks ago. So moving beyond bonds and loans, asset managers should seize this opportunity to launch robust green and sustainability-focused fund strategies in anticipation of rising demand from investors in a post-COVID-19 world. Global investments that factor in ESG considerations have increased by 70% between 2014 and 2018. The momentum will likely persist, with early indications that corporates with good ESG ratings are exposed to less systemic risk and are more resilient to shocks. Since the onset of COVID-19, 24 of 26 Morningstar Sustainable Index funds outperformed their closest conventional counterparts, while global sustainable open-ended funds registered net inflows of $40 billion in the first quarter of 2020, over 40% more year on year, despite weakening in global market conditions. Foundations, trusts, and family offices are also well placed to drive positive change through your investments in your business operations. Impact investing serves to bridge the gap between philanthropy and asset management. An allocation to impact funds managed by private equity and venture capital managers will allow investors to make a positive impact while generating market competitive financial returns. So I'm very glad to see that AVPN has dedicated a full day during this conference to impact investing, covering topics such as impact management and maximizing social impact within family offices. So while impact investing is still a nascent development, there has been good progress. Close to 100 asset managers and institutional investors have signed the operating principles for impact management, which provides a set of market standards on how to achieve measurable, positive environmental and social outcomes alongside financial returns. And in May of 2020, the Global Impact Investing Network, or GIIN, formed a Response, Recovery and Resilience Investment Coalition with AVPN and other networks and foundations to coordinate efforts and direct capital to high-impact solutions in response to the pandemic. The fundraising outlook for impact investing strategies remains strong despite recent challenging months. Managers in Asia can play a meaningful role in creating impact and capitalize on this opportunity. For example, Impact Investment Exchange, a Singapore-based enterprise whose platforms connects impact investors with underserved communities, issued its second Women's Livelihood Bond in January this year. The $12 million social bond is listed on the Singapore Exchange, and a third bond is being planned as part of the $150 million series. BlackRock recently launched an actively managed impact fund to invest in firms addressing global challenges like COVID-19 and advancing the UN SDGs. So in conclusion, the pandemic has raised the importance of the climate and sustainability agenda, and I encourage the financial sector to not lose sight of these issues, even as countries and corporates rebuild. This virtual conference, bringing together over 5,000 participants from 80 markets, is timely for us to continue sharing insights and experiences as we work together to address global challenges. I hope that you will form new partnerships and deepen existing ones through this virtual conference. And I wish you a very fruitful week ahead. Thank you.